Alibaba stock is up more than 47% year to date in 2024. Most of that increase happening in the last month or so following a release of fiscal stimulus in China that has lifted many Chinese stocks, including Alibaba. Of course, I'm happy about that as I recommended Alibaba as one of my top stocks to buy in 2024. So investors that have listened to that recommendation are now up over 47% on this investment. And I thought this was a good time to revisit Alibaba stock and answer if it's time to take profits, if the 47% is enough to take Alibaba stock off my list of top stocks to buy, or if it's still an excellent investment. So let's take a look at this interesting company.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So like I highlighted in the introduction, Alibaba stock up big in 2024, and you can see most of that price rally happening in the last month or so following the Chinese fiscal stimulus to their economy. The Chinese economy has been stagnant in 2024. I thought growth would be much better in 2024 in China. That was one of the primary reasons I had recommended Alibaba stock, along with the fundamental factors of the company and its relatively cheap valuation. And I thought the economy would rebound. The rebound would accelerate from the economic reopening, which started a little bit later than the rest of the world. So it's a bit surprising that the Chinese government waited this long to stimulate the economy, but it was great news for many stock market investors when it did, as many Chinese stocks have soared in recent weeks as a response to that stimulus, which the reason for that is because investors expect that the stimulus will trickle through the economy. As consumers have more money to spend, they'll go out and spend that money, which will increase revenue, profits, and cash flow for many of these companies that are primarily based in China. That being said, Alibaba has yet to experience that burst in revenue. In fact, Alibaba's revenue has been flat for more than 2 years now, 132 billion in revenue, and that's pretty much flat from where it was in 2022. The company experienced excellent growth from 2015 all the way up until 2022, but since then growth has been stagnant. And to make matters worse, Alibaba's cash flow from operations to sales had been falling, and it's now down to 17.99%, which is a solid number. To have cash flow from operations to sales of 18% is a solid number, but the trend line is a little bit concerning, and I highlighted this as one of the reasons why Alibaba stock was trading at such a cheap valuation, is because the company's revenue was flat, cash flow from operations was falling, and then you had the added geopolitical risks that have been attached to China-related stocks. And I saw a similar story with the company's operating profit margin and the return on invested capital. Although these two metrics have stabilized since 2022, you can see the downward trend in the operating profit margin ending in 2022 and recovering higher. That was one of the things that I liked about Alibaba stock, that it had stabilized the declining trend in the operating profit margin, and it had returned to growth in this metric, although in recent months it is trending a bit lower. But if you compare it to 2022, you can see that it's higher from 2022 at 12.13%. Now, an operating profit margin for Alibaba at 12.13%. I sometimes compare Alibaba to Amazon because they operate similar business segments with e-commerce and cloud computing. And Amazon's operating profit margin is lower than this. And so Alibaba operating profit margin of 12% is impressive, to be sure. However, the return on invested capital at 5.4% is not as good, and it's still trending downward. 5.4% is not a good number, and then the trend is also downward. So a few metrics are positive for Alibaba, a few are negative. It's a mixed results situation for Alibaba, and so that's explaining why the stock was trading at such a cheap valuation. Remember, when I first recommended this stock as a buy in January of 2024, I rated it as one of my top stocks to buy. The company was trading at a fraction of the valuation of other e-commerce companies like Amazon, like Mercado Libre, like Sea Limited. These were all trading at much higher valuations compared to Alibaba, and there was reasons for that. But Alibaba, I felt, was trading at a way lower valuation than it should have been trading for, while acknowledging that the company was facing headwinds and there was a reason why the company was trading less expensively than its peers. Now, something that's surprising to me is despite the fact that the stock price is up by so much in recent weeks, the expectations have not improved by all that much. The analysts on Wall Street that are following Alibaba stock, they expect this company will grow its earnings per share by 1.3% on average each year for the next 5 years. And that has not increased in recent weeks. I thought there would be an upward revision of their earnings per share expectations given the stimulus in the economy and given the rise in stock prices across the board for Chinese stocks. I would think that would result in an increase in earnings expectations, but those have not yet been increased. So for now, it seems like the stock price increase has not been justified by an increase in revenue or profit or cash flow just yet. It's been on the anticipation of something happening. It's been on sentiment, people feeling a lot better about the Chinese economy, so more willing to invest in Chinese stocks. And because of the fact that Chinese stocks had been so cheap to begin with, the sentiment was overly negative. And so this has been an adjustment to that overly negative sentiment and coming back towards where the valuations maybe should have been to begin with. They should have never gotten that low to begin with, and now they're just adjusting. So this isn't because of a result in increases of revenue, profits, or cash flow just yet. This is a adjustment to the valuation, which was too cheap to begin with, and it now jumped to match the prospects more equally. Now, Alibaba stock is trading at a forward price to earnings of 11.5, which is the highest this stock has traded for, according to this metric, going all the way back to early 2023. So you've had a big jump in the company's valuation. It's still relatively cheap, although it's more expensive than it was to start the year after rising 47% in the last month or two. So to answer the question, do I still think Alibaba stock is a top 25 stock to buy? I'm going to say no. I'm going to say it's time to take profits and exit Alibaba stock from my list of top 25 stocks to buy. I'm still rating the stock as a buy, but I'm decreasing it one notch from the top 25 list to a stock that's rated as a buy, meaning that there are many other stocks I like better than Alibaba stock right now, whereas previously it was on my list of top 25 favorite stocks to buy right now in 2024. So if you had invested in Alibaba stock, you will have made a nice return on your investment so far in 2024. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.